Hey there, July 11th. Welcome to Deribit Live. I'm Shane Oglow from Rogue Trader Academy, along with my partner, Richard Hodges. And I don't know, things are shaping up. I'm kind of excited about today's topic. Can't wait to get into that. We got people rolling into the room here. Yep. People coming in. Hello, Core. Good to see you. Yeah, Core was like the first one to say hi. Def, G, Andrea, Gene. All right, got lots of great folks on here. Hopefully, that's some good questions.
Don't forget Vladimir.
I don't see. Oh, there, Vladimir. There he is. Jeez. Maybe I'm just. I don't know. My voice is getting better though. Hey, it's almost back to normal. It was like a month I wasn't talking correctly. It was weird. Are you there? Are you frozen?
Me?
Oh no, you're just staring off into space.
I was just staring.
Are you engaged? Are you engaged and ready or what? Actually, our friend Will McGee, I think he mentioned on one of our chats he's going to be on the Deribit podcast that they have. Hey?
No, he was on it, wasn't he? I think it was on earlier this week.
Okay. I didn't know. Yeah, fantastic. That's good. He's a good guy. He's got lots of good knowledge to share. Have you ever watched one of the podcasts, Richard?
Me? No. I don't have time for that kind of luxury.
Well, that's what I was just thinking too. I'd probably like to. I wonder if they've ever watched us. Probably not.
I know that Will watches us.
Oh well,
but not live. He watches the videos when they come out on YouTube.
Wow, what a sad life you must live.
If we're your best chance of entertainment, things are pretty bad, right?
Yeah, 100%. So right. July 11th, things are cooking up, heating up in the summer. Hey, you know what? A little piece of history related to you. Well, not to you personally, but Sir Laurence Olivier died on July 11th.
Oh, really?
Yep. Yeah, he was an interesting character, that guy.
Mm-hmm.
Yeah, interesting character.
One of the greats.
Yeah, one of the greats indeed. All right, so more people rolling in here. I think I'm just going to go ahead and get started. Let's roll through the slides. Deribit Live, trading crypto options with the pros. And just in case anyone was confused, we're supposed to be the pros. Enjoy. So what's the topic today? Bitcoin bottom or range break? Actually, maybe it was a little bit more relevant when I created the title 2 days ago, but I still think it's very, very relevant today. And let's take a look first at our synthetic miner account. This is an account that we set up for you guys on Deribit Live, where we started off with $5,000 cash. We bought some Bitcoin, and it's an accumulator. It's designed to synthetically mine Bitcoin instead of having mining rigs and dealing with all that stuff. We're just going to use options to generate more Bitcoin because we have a long-term view that the price is going to appreciate. So it's been going live now for 19 weeks. Wow, that time flew. We started off with 0.0825. We're at 1,284, so we're still down from our highs. Our current Bitcoin equity is 1,036, up from last week. And Bitcoin mine is 26% increase from the start. So it's not looking as rosy as it was 2 weeks ago. But we had a big, big move in the market. But interesting, we're going to get to the charts here to see our recovery. Let's see. Cash. Here's the interesting thing I want to talk about with this. And Olga pointed this out to me earlier today. She said, the US dollar synthetic mining annualized return, 49.5%. So this is annualized. We're up about 50%. We're 30% last week. So boom, we moved up about 19% in a week, which isn't very surprising for us. We're used to this kind of big up and down moves. But look, versus someone who's hodling, you've moved up 1% since last week. So sometimes it's pretty damn tough to be a hodler. You're really sitting there at the mercy of the markets. There's not much you can do. So at least when we're trading, yes, we can have big drawdowns. Yes, it can be a challenge, but we control our own destiny, and we're able to do things to help our situation.
Ever since 2003, when I first started trading options, I've never understood why anybody would trade underlying. It's just too risky, in my view.
Okay. Yeah.
Because with options, you can get all the upside and with safety. Whereas if you just go yeehaw and buy the underlying, you could, you could do this 24% down.
Yeah, and it doesn't throw off a dividend or anything, so there's really no benefit to owning it. So, and as you say, I mean, you can construct any kind of position you want with options, with the exact same risk reward payoff.
I suppose in the one outlying case where the price goes to the moon and the people who are short can't deliver it, and then get the payoff. But that's what insurance funds are for, right?
Yeah, and I guess there's also the possibility of missing out. So you've got an option dated at the end of the month, and sure, the price goes up and you're happy, but then it just keeps going up and up. You don't have any more options, and it's like, but yeah. I guess we could be creative and find all kinds of downsides or upsides to anything, I suppose. But so here's the chart. This is now the Bitcoin return. Okay, so you can see we're just happy. We had our cake and we're eating it. And we're having a little party over here. And then bam. We got smacked with this huge move down in Bitcoin. We're down 25% from the first week of June. So it's not like it's been a little baby move, but we have that initial shock and reaction and equity dump, adjust, vols settle back down, all those things. And look, we're back up. Now, this account hasn't done as well as one of our other accounts, which you can only see on our live streams. So you can check us out on Patreon, Rogue Trader Academy, or join Rogue Trader Academy, and you'll get access to, that's one of the things you get access to. The other account is more of a bastardized Iron Condor strategy. It's doing much better, but this is still pretty good. We've recovered it, 70, 80% of that move. And I think we're pretty darn happy with that. When we look at the USD return, it's not quite as good. But again, this strategy is not designed to return USD. It's designed to accumulate as much Bitcoin as possible, because if it goes to 200,000 next year, we want to be on board with as much as we can.
Just go back to the USD one, because just bear in mind that we are long the underlying, and the underlying's gone down, and we still made money.
Yes,
it's worth mentioning, right? So imagine what this strategy does when the price goes up.
Yeah. This strategy, we do really well when the price goes sideways, when it creeps up, or when it goes up more dramatically. Now, we don't want the dramatic moves up, because sometimes we're selling calls against in the money puts. I think really the market up until the recent dump was just glorious for us. We just kept hitting all-time highs, not just in this account. Sideways markets are wonderful, typically for option sellers.
And so we do an detailed analysis of how we're trading this account on our Patreon, which is a mere $2 a day, less than the price of a Starbucks bag of sugar. But actually, we've been taking advantage of this dip. It went against us, and it put us in the money on our puts. But we've just been using those puts as if we were long Bitcoin. We've been selling calls against them as fast as we can. So we're trying to pick up like 1% a day in premium from really short dated calls against that delta, while we have it, hoping to accumulate more and more Bitcoin, so that when the market does recover, and we're quite sure it will, we'll come onto that. Then we end up with accelerated returns. So we're loading the spring at the moment.
Mm-hmm. Yeah. Vladimir mentioned, I see you responded, Richard, in the comments. He said trading the underlying equals playing the casino, trading the options equals owns casino.
Well, almost, but
almost.
You still have the tiny risk that the losers won't pay you. But fortunately, that's why Deribit has this $100 million insurance fund that we can draw down on.
$100 million. Wow.
Yeah.
All right. Let's pop over to the charts. Let's take a look at what's here. Let me just cancel this slide here, and I'll pop over the charts. Take a look at what the heck's happened. And I assume you can see this, yeah?
Yes.
I mean, when we're talking about tip to tail, and I might have mentioned this last week too, I mean, that we're talking like 25%. That's a pretty damn big move. We were hitting highs as we were doing this. As long as it's a slow move, we don't care. It's just the dramatic moves that cause us, a little bit of pain in the backside and causing.
And also, we changed our rolling strategy on this one, didn't we? Because rather than rolling out the puts, we were actually just standing firm and letting ourselves get hit.
Yeah.
So we're just trying a different strategy. which has cost in the short term has cost us a lot more than it would if we just roll the puts out.
Yep.
But I think in the long term it'll pay off quite nicely.
Yeah, I think we'll make a lot more. And as Richard mentioned earlier, is we just keep consistently selling calls against those in the money puts, treating those in the money puts as being long. And if the market recovers as we expect it to do, those puts will go worthlessly. It will get bought back worthlessly, and we'll have made all that extra premium from the calls. Let's see how that works out. So when I made the title about, the title is, hey, is this Bitcoin bottom or do we have a range break? And my thought was, well, hey, this is the previous low over here back in April, May, right? Well, we went below it. So there is a chance that this old support now turns to resistance. That's sort of the classic technical analysis view on it, right? And it very well might. It very well might. And maybe, this support area down here in the low 50s, maybe we're just going to bounce and stay in this range. I think there's a really good chance we're just going to stay in this range between kind of mid 50s and 60,000 for quite some period of time. However, I think for the last 4 days straight and 7 of the last 10 days, we've had ETF inflows. The Mt. Gox thing is done. Good point.
Well, it's not done, but it's priced in, right?
Priced in, yes. Yep. No, I agree. As you often say, buy the rumor, sell the news. So I wouldn't be surprised to see it grind back up, even to mid 60s. That would not even normal day at the office. Although we may continue to go sideways for a while, but how long are the ETF inflows going to be positive? And everybody dismisses the Mt. Gox, says, not a really big thing. Market absorbed it. Who cares? Before we start going back up. Good question. Now, could some news come out tomorrow and this thing shoots down? I suppose it's market, anything can happen. But that's what I think. So I think Richard and I are both on the side of thinking this is probably the bottom. Now, we're lucky enough to be on Rand's show, the Crypto Banter, last Saturday. You can check that out on YouTube. And he was talking about doing the same thing. He was talking about buying down here, whether he was buying the underlying or futures. And he also actually bought some options, I think, December options. But a lot of people really thinking, what, this was probably the capitulation at the end of this downtrend. And they could very well be right. I think this is quite likely. So we're sort of just going to stay in it. And that's why we're choosing. We've got like sort of 62 to 64, I think, in some different accounts, short puts. So they're, some of them are $5,000-$6,000 in the money. But we're okay with that. We're okay to roll those out another month, collect some extra premium, keep the strike the same, maybe move the price, the strike a little bit better in some cases, but continue to sell calls against it, double cover the calls. So if we do shoot up, easy to manage the calls. Puts get cheap, we'll take them off the table. That's our strategy. If it plunges down, well, at least we've been selling calls aggressively against those puts. Anything you want to add in there, Richard, on that?
No. I think actually some of my in the money puts are even at 66 or 67k, and I'm quite prepared to just keep on rolling those out every month all the way to the end of the year and selling calls against them. Very happy, and I'm sort of using the rule of thumb that I'm very happy to sell 2 at the money calls versus or 2 at the money 1x2 call spreads versus in the money one put. It's essentially like making the whole structure zero delta, and then I'm very happy to roll those calls up as the market glides up or collect the premium if it doesn't. So.
Let me show you a trick, old trader's trick. If you're ever stressed about this chart and you're looking and going, oh boy, what should I do? What should I do? What should I do? Well, you know what? Just go a little further out. Oh, it doesn't look so bad now. It still looks like shit. You know what? Let's go a little further out.
Your screen's taking a while to update. I think it's got the fade thing on, so it's just using a lot of bandwidth.
Oh yeah, I think I've got a lot of stuff running. I can hear my
computer. But you're done now. It's all clear now. Oh.
Daily chart.
Wait a minute. You moved something. It all went quiet for a few seconds.
Oh, must be too much. I'll stop sharing.
But anyway, the long story is short. Is if you're getting frightened about the 15-minute chart or the 5-minute chart, they expand it out to a daily chart or 4-hour chart, and then stop worrying.
Yeah.
And if you're still worrying at that stage, you're overtrading. Just lower your positions.
Yeah. Now, let's not confuse that little trick with the trick of someone who wants to start day trading and they get in, they buy and they sell. If it goes horribly against them, they say, well, you know what? Now it's an investment. not the same. Not the same. Trust me, I've heard that many, many times. I used to have a manager on a trading floor who bought a bunch of, I don't know what it was. And a month later, it's like, how's that trade working out for you? He's like, well, it's an investment. You know, he's trying to convince himself that it was okay. And that was actually right after, that might have been around 9/11, actually, when the markets.
Well, it would have been an investment if he'd held on for 5 years.
100%.
Well, I mean, that's kind of what we're thinking about Bitcoin, right? We're in the money on long Bitcoin, but we're thinking, well, we know it's going to come back, and we're very, very happy to sell calls against that delta position, right? We're thinking that way. But actually, what I do for my day job is actually a strategy very similar to that. We do a future strategy, and if a future strategy goes wrong, we actually step in with options to put it right, and prints good money.
Nice. Hey, I think your wife has had some influence. Your background's looking really good there, Richard. I assume it was your wife.
I was. You know what they say? It'll only take you 5 minutes. You know, just you had that drill for ages, you haven't used it, and the next thing you're 3 hours deep in DIY and raw plugs that don't fit, and then you got to go and buy some different ones because the plasterboard isn't right, and then and the end result is some shell top.
Yeah. No, your little office space is looking quite cozy there.
Yeah.
Hey, we had a question, Richard, from our last week's Deribit Live on YouTube, and you can always check these out on our YouTube channel. And someone asked us if we wouldn't mind talking a little bit about the difference between Bitcoin options and he said common options, and I asked for clarity. He just meant TradFi, so stocks or indices, the typical. So I'm sure you'd like to have a kick at that, Ken.
Well, if you ignore the obvious difference on Deribit that they're cash settled but they pay in bitcoins, but that's just an accounting issue. The fundamental difference is that trading, for example, options on the S&P 500 or the FTSE 100, which I used to do, is kind of a sedate thing that you do on a weekly basis that doesn't cause you too much stress unless you've obviously put too much risk on. Whereas trading options on Bitcoin is like stepping onto an untamed stallion that's just been stung on the arse by 600 bees, and it's trying desperately to throw you off and kill you, right? So I don't know where I get these metaphors from.
You just make that up?
Yeah, it's inspiration. So we get to see in Bitcoin every 6 months pretty much what we see on the S&P 500 every decade, right? In terms of movements and shocks and recoveries and trends and whatnot. So it's a lot more full-on experience, and particularly if you're short vol, as we're showing you on this strategy. It means you've got to touch the account every day, really. Whereas you can't just leave it a week and wait for your broker to phone you to tell you that things need to be moved. You've got to be on it. But at the moment, daily's enough, right? Sometimes we've got to touch it 3 times a day. But I think the overall, therefore, the difference is that it's extremely interesting. The high volatility of volatility, or vol as we call it. So implied vol can go from 40 to 100, and then down to 50, and then up to 150, and then down to 60. That's a massive range of vol that you just don't see in stock markets unless something catastrophic has happened. And even these days, a major terror attack or a start of a war doesn't even phase the stock markets because everyone just thinks, they'll print money, who cares? Whereas Bitcoin reacts, to the slightest jitter. So it's a far more interesting beast to play with, and one I think you've got to treat with much more care, right? Because there's no central bank that's going to come and step in and save your ass in Bitcoin. You live or die by the sword. So it's really good for teaching risk control and size and control and so on.
Yeah, another thing is sort of related to that is, a lot of times people will study options trading and they'll be reading a book and they see the theory. Well, what if IV explodes to this or that, and how do the metrics change? But you really aren't going to see that too often, maybe once every 10 years in other markets, but you'll see it quite often here. So if you really want to learn how the Greeks act with price movement, Bitcoin's the way to go.
I think trading Bitcoin has made me a better trader for sure.
Yeah, you start to become much more risk adverse. And, like I wouldn't be double covering call options if I was trading the S&P.
Right. Yeah.
In the same way, but it just, so there's an adjustment period. If you're trading the S&P or the NASDAQ, the Russell, or whatever you happen to be doing, you come in and you'll know what you know, and you'll do what you know, and you'll find that you'll need to make adjustments. And some people are smarter than I am, and make those adjustments faster without getting stung too much. And other people will, you'll learn that 30 delta call you just sold. Is it really a 30 delta call? Like in real, like I said, at that moment when you sold, yes, the market says it's 30 delta, but when we step back, that 30 can change to 60 much faster than you'll see on the S&P. So you can't really consider it a 30 delta sometimes. In the back of your head, you're like, boy, this could be 40, 50, 60 very quickly. Anyways, I have a lot of comments about that. And yeah, if anyone has comments too about whether you think Bitcoin is at the bottom of its range, and it just kind of broke through the bottom, it's hanging out here, it's going to go back up into its range being the previous range in the 60 to 70. Or maybe you think we're going to hang out here in the 50s and maybe throughout the summer. Who knows? One thing Richard and I were talking earlier on our live stream is we're probably going to start to layer on long positions. We want to be long gamma going into the end of this year and into next year. So if we do get a big move up in Bitcoin above 100,000 or something, we would definitely want to be benefiting from it. So we're going to start deploying strategies to do that. But let me get to some questions here and some comments. Vladimir, I think we're not break this range between 54 and 72. So basically, yeah, okay. You're just saying basically just push down the bottom of the range, is I guess what you're saying.
I think that's fair until September time. I think that's reasonable.
Yeah, I don't really see it going down a lot more unless there's a real good reason for it too. But who knows? Let's see. Paul says, agreed, Vladimir, but selling iron condors with shorts at 50 and 70K doesn't produce much.
No, you've got to work it. Yeah, you've got to be in there fighting. 25, 30 delta is where the money is. Maybe 40 delta. Then you've got to watch it daily. So that's why we like to trade in short dates, so we can roll easily if we're wrong.
Yeah. And then Vladimir then responded. Sorry, go ahead.
No, I was going to say that there's 3 questions in the Q&A area too.
Oh, I was just going to go through the chat questions first, if that's okay.
Yeah.
There's a bit of a conversation that was going on there. Obviously, people on YouTube aren't going to see those. But Vladimir said, Shane just said what to do. Sell 62K, cover it 2x times, and it'll gain more. Yeah, just because we don't want to get caught with our pants down if it goes up, especially when you're expecting it to go up. It sucks when you lose on something you expected to happen. That's frustrating. So we're happy to put on that 2x coverage. And another thing I'll mention too, and this is something our last year, we don't necessarily 2x coverage on the same expiry. We might 2x, let's say we've got some things expiring in 3 days. We might 1x cover that. We'll add some coverage a week or 2 weeks out, especially if it's lower vol and it's relatively cheaper out there. So we've still got the 2x coverage in place, even if it's on different expiries. I hope that makes sense.
Actually, I can show that.
Yeah, sure. Why don't you?
Screen 2 shared. Yeah, so here, this is the synth mining account. You can see that we're short 2.2 calls at 60K expiring tomorrow. We're long a mother load of cover here, and that's because we had a bunch of calls get bought back for 5 basis points on the 12th last night. So this covers all residual now. We just leave it in. Just you never know. We might get 20% up today, then happy days. But we also, so what we did was we sold some more risk tomorrow. Actually, some of it's already in the money. And you see we've covered it 1x up at 64. So it's quite a long way away, that cover, but At least it's there. But also, we went and bought on the 19th of July 4.4 calls at 64 as well. And so these are acting as double cover for the future. And what we'll do is that these positions on the 13th, we'll be rolling them every day or two. And every day, a day or two, we'll be trying to either roll up to recover a loss, or rolling to gain some more premium. And we'll roll with single call spread, 1-by-1 call spread, but knowing that in 7 days' time or 8 days' time, we've got this sort of stop here at 64k where we've already got cover. And that cover at 64k on the 19th is decaying much more slowly than the cover does that we cover these with. So we've spread the cover out. And actually also we did that because the implied volatility on the 19th is much lower than on the weekend, this weekend. So we thought, why pay for short dated cover we're never going to use, high vols, waste of money. Let's get a week's worth of grace out of this. Could have even gone out a month out, to be honest, and paid it, bought it up here at on the end of the month. That might have even been wiser, but
yeah, it looks like 46 to 47 vols, so much different, but cheaper for the end of the month. Now the thing is too, as we get deeper into summer, we kind of expect vols to drop. I wouldn't be surprised if they got in the 30s, especially into August. So we don't want to go too crazy, but don't forget, if we get vols down, actually, if you show the devol, if you wouldn't mind showing that, that's something interesting to look at, because we think, well, it's 40 vol, it's 45, it's 35, whatever. Look on a longer date. That vol is going to spike. If you're buying Decembers or Marches or whatever of next year.
Yeah, don't be fooled. Always zoom out. That's the real world, right? Vols are low. Vols are low for Bitcoin.
Yeah. We're going to get vol spikes.
Yeah. And notice, it's a shame this chart doesn't have the spot price superimposed over it, because it would be really instructive. What you'd see is that you almost always get vol spikes when the market's going up hard. Not particularly when it's going down. This vol's been dropping like hell, while the market's been dropping this month. And if vol does spike, you'll definitely be glad that you had 1x2s or 1x3 call spreads and not 1x1. And you'll definitely be glad you weren't naked.
Yeah. And a lot of people worry. They say, "Oh, I've got these calls that are in the money now." Fine, you can roll them out or closer to your cover, or you can just strangle them out. And I never worry about that too much. Rolling and adjusting is just part of trading, and so many people get so stressed when something gets at the money or in the money. And I get it. It's more comfortable to have things out of the money, but market's going to move.
Yeah, but remember back at the beginning of the year, we had where were we? We had I had 60,000 calls in the money, and I was worried about them and rolling them and messing about and got them up to 65 and 66 and so on. And in the end, it all came back. I should have just rolled them out 6 months and left them.
Yeah, just went on a holiday, or redecorated your office. Whatever it takes.
Or done the thing of leave them in the money. Who cares? Just keep rolling them in the money and just keep selling puts against them.
Yep. Reversion to the mean, baby.
But hey, it works. It works as long as you're covered. Oh, market's moving down a bit. Oh, it's moving up.
No, it's going up.
It works as long as you are not in too big size.
Yeah, that's key. That's key. And another reason why our drawdown on that chart we showed at the very beginning, showing the performance of Sentimana wasn't bigger, is because we're controlling our risk. Controlling your risk, super important. Please, last questions, comments here, and then I'll go over the questions. Vladimir, when we're talking about the difference between the Bitcoin and the TradFi options, as Richard mentioned, IV, big difference. Linear options versus traditional, paying out in Bitcoin, big difference. Hard to get used to that, I think, for some people. Core, I'm slowly seeing more bullish buys on the order flows. It can still take you up to another 2 months until September before a big bullish move. I completely agree. I think, Richard, you're talking about investment bankers on holidays. It takes them board meetings and this and that, and 2, 3, 4, 5 months later, then they finally get their work, their teams out there selling, kind of like the Wolf of Wall Street on the phones, buy now. But it takes a bit of time for that to happen.
Well, because there's all these investment committees before these new products get onto the list of approved products for these investment funds, pension funds, and whatnot. So it just takes ages and ages. Because people running pension funds are not too concerned about missing out on huge gains on Bitcoin in 6 months. What they're concerned about is making sure that they've got enough money for you in 20 years. So they take a long, hard look at these things before approving them.
Paul says, what is strangling out a short option? All I mean is that if I happen to have a short call and the price is going up and I decide to adjust that call, I could roll it out in time at the same strike. I could roll it out and up, same strike, or a higher strike further out in time. Or I could roll it up, same expiry, but double my risk, just moving up in price. Or I could do something like strangle it out. I sell half of it as a call, half as a put, or 70% as a call, 30% as a put, whatever. I don't have to go from call to call to call and just keep following the market. I can choose to do whatever I want. Let's say I rolled a call today and I decide to roll it to the end of August, for example. I could really give myself a lot of space from the current market price to my short strikes on each side. I give myself, maybe $5,000 of wiggle room each way and make myself feel pretty damn comfortable. Then if market moves down towards one of those short strikes, I could roll that down or up or strangle it out again, whatever I want to do. I don't think that I'd say, I don't know if there's a statistic. I'd say maybe half the time I'll roll a put to a put or a call to a call. The other half of the time I'm probably strangling it out in some level of another, like not necessarily 50-50. I'm just looking for where the best premium is sometimes. So sometimes if I make that decision to strangle it out, looking, well, where's the IV the highest right now? Maybe I'm just going to look for those spots, and I'll look at the volatility surface, and I'll sell a little bit on one side and 80% on the other side to take advantage of a vol spike there. Let me just, why is my mouse here?
You know what? ETH has come up a chunk.
It was 3,100 this morning. What's it? 33, 32?
32 now.
Okay. Yep. Question from Vladimir. Can you please tell me exactly how insurance fund on Deribit works? Because I'm thinking of scamming them. Oh, sorry. No, sorry. Because I can't understand it, to be honest. System will liquidate your position if maintenance margin drops significantly.
It's the insurance system is very simple. If people can't afford to pay you, if they lose and you win, then the insurance fund steps in and makes sure that they can pay you. That's all.
No, it's just counterparty risk. They're just therefore. A question from Gene. Have you made use of the new cross margin on Deribit? Actually, Richard has.
Yeah,
I think.
Yeah.
You just have to have other assets in the account in order for it to cross margin against.
Yeah.
But yeah. Question from Paul. If you had an empty book right now, would you still put on the positions you have now with the in-the-money short puts? That's a very good question. That's a very good question.
I'd never choose to dive into a position like this, but I think I would be happy to be buying Bitcoin and selling calls against it for sure.
And if one had the view that we're going to be up at 62, 63, 64 in a few weeks, boy, you get a lot of juicy premium for that. And it would, it's not something I would normally initiate, but sometimes when you're in that position, you're okay to be in that position, and it works out really good. We also talked today about rolling in the money puts up versus down. Normally when you roll it or you adjust it, when we've got it in the money put, we're keeping it the same strike, for example, but collecting some extra premium. We're collecting the same amount of premium, moving it closer to the money, a little bit lower. But you can also roll it up and collect a boatload more premium, especially if you're quite bullish on the long term. Keep adjusting it. That's not something people normally do, but you certainly can do it, and there's strategies built around that. Question from Gene. Do you happen to make some zero DTE scalps when events like CPI? Gene, I particularly don't use zero DTE. Instead, I usually trade the perps if I think something's going to happen. And I think that It allows me to scale in a little easier. I put a stop loss on the damn thing too. I don't want to turn away from me in case I'm wrong. I just sometimes the zero DTE doesn't have the liquidity I want, or I'm not getting the fills I want. So I just choose to trade the perps. Question from Johannes: when rolling, how do you price cover for the newly sold options in? Do you
we have to just compute the roll so that we actually price in some cover as well. That's all. I mean, because if you're going to have to pay, say, 200 bips to get some callback, and then you're going to have to roll, you're going to have to sell a strangle, say, for 250, and then you're going to have to spend 25 aside on cover, right? If you want 1x1 cover.
Yeah. And that's something we just kind of compute as we go through. But I suppose using the strategy tool might be.
Yeah, you could do that. We sort of mentalize it. But,
yeah. Question from Vladimir, following my insurance question. So let's say I had a long Bitcoin position, which was liquidated by Deribit. Now this long position is held by Deribit, no?
Well, no. If you've been forced to sell it, then someone else has bought it. Some market maker has bought it from you. And Deribit don't take risk.
Question from Johan says, Deribit closes your... Okay, in response to this. Deribit closes your position on market price. If that's not enough to pay your liabilities, Deribit steps in and pays from the insurance fund.
There are special market makers who stand by to take on your positions if you can't maintain them.
Special market?
Yeah, so they're kind of
It's like a SWAT team, like waiting in the back room, ready to...
Basically, yeah, they take all your toxic crap and
I have a joke about mortgage-backed securities, but I'm going to leave that out. Hey, we've gone about 8 minutes over time. Any last questions, please drop them in there. Great chat today. Interesting market action. We're sitting at 59,000, so we've come up a little bit this morning. I think this morning we were down 57 at one point, or maybe that was yesterday. No, this morning. So we're up $2,000 from the lows of the day. So that's pretty good.
We are getting these little $2,000 moves, aren't we?
And this might be a great time to sell some call spreads. Not financial advice. But as soon as I get off this, if I've got empty spots, and especially if I have cover in place because I bought cheap calls when it was going down, right? I'm probably going to sell some short-dated calls. Andre, CPI is better than expected. Watch your positions. Okay, that's what happened. Thank you, Andre, for paying attention while we were yapping.
Yakking. Yeah.
Thanks, everyone, for joining us. Of course, you want to check us out, check out our live streams, go over to Patreon, Rogue Trader Academy, or check out roguetrader.academy and join us every day and talk nonsense with us. Check out our trades and maybe improve your trading knowledge and your results. Until next week, catch you then.
Okay, good to see you.